Facebook keeps churning out the product updates, but investors don't seem that enthused. Graph Search, Facebook Home, Video, and Instagram, just a few of the new features it has made available this year, but the stock moving lower. It climbed above $32 in January after several analysts raised their price targets ahead of its quarterly results, but suffered downgrades after its surge in mobile advertising revenue failed to meet high expectations. Analysts again became more positive after its first quarter results showed strong revenue growth, but the shares have since lost more ground. Wedbush Managing Director of Equity Research, Michael Pachter, joins us from Los Angeles with his take. He has an outperform rating on the stock and a $35 price target. So, Michael, what's your take on Facebook at this point?
You know, there's two things to think about with Facebook. There's the company and there's the stock. I think the stock doesn't work because I think that right now the management team isn't particularly investor friendly. And I don't mean that they're jerks. I think they're nice people and they mean well. They're not focused on investors, so first of all, they haven't been out marketing. Second, I think the way that they provide guidance is skewed toward the negative. So they don't guide to revenues, so we all have to guess how much their revenues are going to grow. They do guide to expense growth, and they talk about big numbers on the expense side, up 50% year over year.
Right.
So analysts are fed, half of the income statement. We know they're going to spend a lot more money, and we have to guess as to whether they're going to monetize, their new initiatives.
All right,
and then we get a steady stream of information about the new initiatives with nothing that has revenues associated with it. So it really leaves us kind of in a lurch.
So where do we stand? I mean, their earnings, we're going to hear from them about earnings for this past quarter in about 3 weeks. What are you expecting to hear from them?
I think they're going to surprise people with more revenue than most have modeled. And again, not by $500 million, but I think they'll beat modestly by 2 or 3% on the revenue line. I think they're going to surprise us by managing expenses a little better than they said they would, by again 2 or 3%. So I think they're going to beat. I think they'll come in with a couple of penny beat. People are going to love them again. I think that the real acid test is when they talk, are they going to talk about revenue growth? Because that's really what drives internet stocks, revenue growth.
Right.
And if we think revenues are slowing, the stock won't go up.
And speaking of the stock, I mean, we haven't all these updates. They had Instagram Video, Facebook Home. Why haven't they moved the stock?
I think that, first of all, I think that the sell side's done a pretty crappy job in looking at some of these initiatives. And I think that, streaming video or video attached to Instagram is a really great example. People look at that and say, there's no revenues. You can attach a video and yet there's no advertising at all. I don't understand why the sell side doesn't watch YouTube and see that 90% of YouTube videos have an ad associated with it. You know that Instagram videos are going to have at least a 5-second ad before you watch the video. And I think the interesting thing about Instagram is the videos are posted by your friends, so you actually care what's going on. With YouTube, you're just idly curious about what you're about to watch, and we sit through as long as a 30-second video before a YouTube video. I think this is a massive gold mine for Facebook. I think you're going to see videos attached to just probably 20 or 25% of Instagram posts, and I think that's going to be a big revenue driver. But again, the sell side's waiting for the company to tell them that. I think they'll tell us that on the earnings call.
And we saw Mark Pincus bring in a new CEO at Zynga. Do you think Zuckerberg needs to do the same?
That's a great question, and I'd say that the difference between Facebook and Zynga is that Sheryl Sandberg's a pretty capable COO, and I'm not really sure that Pincus had a very capable COO in David Koh. He's fine, but he's a mobile guy. He's not really ever run a company. Sheryl's been pretty senior at Google. I think she's actually pretty good. I think it would be great if Zuckerberg would step aside and become the chief product officer. That's pretty much what we saw at Pandora with Tim Westergren. We're seeing it now with Pincus. We saw it at LinkedIn with Reid Hoffman. So I think that's a better model. I don't think Pincus is horrible. I think really all they need to do is improve their investor communications effort. So I actually think if you got a more investor-friendly CFO at Facebook, the stock would start to work. I think Sheryl's doing a great job, and I actually think Zuckerberg's doing a pretty good job.
So bottom line, what do you want to hear from Facebook?
I'd love for them either to give no guidance at all or give real guidance and tell us how revenues are going to grow. I think that they're too cautious. I think they act like they have no idea how their business is going to ramp. In fact, just about every single thing they're doing either is driving greater user engagement or driving ad revenue, and I wish they would say that. And if it's just to drive user engagement, that's fine. I mean, more minutes spent means more opportunities to monetize. I just like them to say that, and they tend not to talk in those terms. They just talk about a better user experience. They don't talk about minutes. They don't talk about ads per minute. They don't talk about CPMs. I'd love them to talk like other internet companies do, and I think the stock would work really well.
All right, thanks so much.
Thank you, Bobby.
All right, thanks to Michael Pachter at Wedbush. That is Techquity for this Friday. Remember, you can follow us on Twitter at RTRS Techquity. I'm Bobby Rebell. This is Reuters.